Hey, what's up, stock compounders? Brad here. So today I want to do a deep dive on Shinoken, okay? Japanese company that Pabrai has loaded up on recently as one of these spawners that he's been targeting under $500 million. So it checks both of those boxes. But first, I want to give a big shout out to 4 people who really helped me pull all the information together for this video. First, Mike Kruger. Okay, Mike Kruger gave a talk at MOI Manual of Ideas Best Ideas 21 conference. Okay, I watched his talk. It's about 40 minutes, and it's just a great deep dive on, the background of Shinoken, the business model, the scandal in 2018 that caused the price to drop so much, and it still hasn't recovered through today. So big shout out to Mike Kruger for kind of laying it all out. Shout out to Jeremy Raper for writing up a few blog posts on Shinoken. Mike Kruger actually makes reference to these blog posts a number of times. And Jeremy Raper is just a very smart investor. I follow him on Twitter, so check him out if you haven't yet. Number 3, Mohnish Pabrai for really bringing this company to my attention through TIKR Terminal. I could see that Pabrai had been buying this company recently, and he's alluded to it a number of times in recent lectures at different universities. So, hats off to Pabrai for bringing me one of these spawners, okay? And number 4, Retro Ranger, okay? So Retro Ranger is a common viewer here, one of the tribe here at Stock Compounder, and he followed up with Mike Kruger after that Manual of Ideas talk and got a little bit more information and posted that in Corner of Berkshire and Fairfax under the message thread for Shinoken, and that kind of helped round out some of the story here, some of the thesis. So thank you to Retro Ranger. So without further ado, this recent Value Investors Club write-up is from Mike Kruger. I'm pretty sure, MPK. So MPK Partners is the fund that Mike Kruger manages. This is, like I said, just from October of 2020. And a lot of great information here. It's actually pretty concise. There's not much fluff. So if you want to get a better handle on this company, we're just going to pull a few things out of here. I want to give you the background of the company. So Shinoken founded in 1990. Okay, the founder was 25 years old at the time. Hideaki Shinohara, who's still CEO and owns just under 20% of the shares. So big insider ownership for the CEO there. So his goal, his vision in 1990 was to create a business that would allow the typical salaryman to become a landlord in Japan, okay? He wanted these kind of office workers to have access to investment properties so that, through retirement, they could be collecting rental income. Sustain them kind of past their working careers. So, they do that by kind of building out and selling apartment complexes and condos, all right? So let's get into a little bit what that is. The apartment buildings, their approach to the apartment buildings is to identify kind of oddly shaped land. And they have 8 different designs that they can, make use of kind of land that other developers have a difficult time with. So they're able to get those at a better deal in the cities, okay, or near cities. So these are 2-story apartment buildings, usually 7 to 8 units, wood construction. And then they sell those to these, salarymen in Japan. Loans can sometimes be 90% loan to value, okay? So these individuals who are looking to become property owners can really have access to some things that they might not otherwise have access to. So it looks like sometimes they get 100% loan to value mortgages. So, and part of the reason for that, it seems in Japan, there's very low unemployment. I guess, it's a good bet on these individuals. You can see here, this is kind of a write-up about why they're able to get loans so high. High occupancy, tenant credit quality, low churn recurring revenues. So all this stuff in here. Down here talks about where they target these structures. So that's kind of the apartment building part of it. That's one aspect. The other is condos. So they build these 10-story condo complexes in, I believe it's just in Tokyo, right? It's just kind of in the big city. And they don't sell the whole building because that would be too expensive. They sell the individual condos. Now, a huge part of Shinoken's business model is, part of the piece, where do I want to be? I want to be, right, we're going to scroll down a little bit. This one. So the business model, it really started out as real estate sales and real estate management, okay? And the sales, you can see the sales were just all over the place, up and down, so much volatility in the real estate sales. So what you can see here, the real estate sales is not the recurring revenue piece, right? That's the kind of the wild up and down piece. The recurring revenue piece is the real estate management, okay? When they sell real estate, on much of the real estate they sell, they become the property management company for that real estate. So they collect 5% of rents, and usually I think they start with like a 5-year lease, and then it renews every couple of years. And the vast majority of those renew. I think there's only 2% per year that don't renew. So you can see the growth down here in the real estate management recurring revenue stream. While there's all this choppiness up here with both the real estate sales and the construction. There's another piece, this green piece, that's really come into play. That's not the green piece. The orange piece. You can see it's very small, but it's growing. It's the energy. So Shinoken sells both kind of the natural gas and electricity to a lot of its customers, and that's recurring revenue. That's a pretty high margin business that Shinoken has. So you can see these two at the bottom here, these recurring revenue streams. And I'm going to pull this slide here. So profit composition ratio, this is really important to understand kind of the long-term compounding potential of a business like Shinoken. So in 2017, our real estate sales made up 77% of profit, okay? Besides real estate sales. So everything other than real estate sales was 23% of the profit pie. Fast forward to 2020, real estate sales is now less than half of the profit for Shinoken. In the other piece, so those are apartment and condo sales, like I was saying before. The other piece, you've got the contracting work, but you've got recurring business that's becoming a bigger and bigger piece of this pie. That's the real estate service, the property management. They also sell life insurance to their, not life insurance, they sell insurance to their tenants. Unemployment insurance. What a fantastic product to sell to your tenants. So if you lose your job, you can still pay your rent, right? Because you have unemployment insurance. So, I mean, it's a fantastic product for a company like this to be making additional money from and ensuring that they are able to collect rents every month. The energy, like I said, is a part of this recurring revenue business, the gas and the electricity. And then you've got life care, elderly care. So that's a segment that Shinoken is really getting more and more into fairly recently. It's a pretty new segment for Shinoken. So I'm going to scroll down here to slide 33. We're almost there. So this is fascinating. This is really the DNA of a spawner here, okay? So if you look at this, so this breaks down each segment that they're in, okay? Real estate sales, real estate service, general contractor, energy, life care, and others. They're expanding into Indonesia and a couple other business lines there. So you see the main business, investment apartment sales, condo sales as an investment, condo sales to live in, so kind of owner occupied. And you can see in this column, you know, how they've gotten involved in these different areas. So we have the founding business. Okay, it really started in investment apartment sales and rental management, founding business. Okay, that's where it all started. Now you can see an acquisition in 2003, Shinoken Harmony. That was for investments in condos. You can see an alliance was formed in 2015 with Properst. Shinoken owns 35% of Properst, and that was really to diversify income into these live-in condos. Okay, you get down here, rental brokerage within the real estate service. They made an acquisition, Allway MYU Corporation. Condo management was from an acquisition, Shinoken Amenity. Okay. Or a merger. That must have been a merger. So you've got all of these different business lines that were either created in-house, acquired, or there's an alliance that was formed. So this is very impressive from a spawner perspective. It just gives you a sense for what this management team is made of, what their DNA is, how they approach business. Very impressive. So next, I want to look at how do we value this company today? Okay, we can see they've got their hands in a lot of different pools, which is great. But we want to get a sense for what might this company be worth today. So that's where I go to Jeremy Raper. Okay, so this is from February 2020. Sum of the parts valuation. So he did one about a year before in 2019. I think it was actually August of 2019. This is an update for 2020. So what he did here is he's got full year 2020 estimate for earnings before interest and taxes. So this is in billions of Japanese yen. And then he applied a multiple based on, what kind of the low end of what similar businesses in these areas are trading at in terms of the multiple of EBIT. So we've got 5 times for real estate development. That's the real estate sales. We've got 12 times for management, real estate management. That's one of the big recurring revenue businesses for Shinoken. So it's got a higher multiple. We've got the contractor piece 5 times, which I guess is in line with comparables. We've got the energy 10 times, life care 10 times. And then we've got, I'm going to jump into my spreadsheet here. We've got the corporate overhead, which is a subtraction from the value. So what I did is I pulled actual 2019 numbers from Shinoken. This is from their latest financial release. And then full year 2020 numbers for EBIT. So we've got, and we have Jeremy's estimate here. This was his estimate in February 2020 of what Shinoken was going to generate for the full year of 2020. So from 2019 to 2020, we can see the real estate development, the real estate sales portion of the business actually dropped by almost 20%. And I think a big part of this is the pandemic. I think banks kind of tightened, maybe were less willing to give real estate loans, which, this part of the business is so heavily dependent on. So with banks tightening up because of kind of the increased risk from people losing their jobs, everything closing down, I think that was a big piece of real estate sales dropping 19%. Real estate management dropped 6% from 2019 to 2020. Contractor work dropped 12%. Energy increased by 8%, which is great. That's becoming a larger and larger piece of the recurring revenue stream. And then we've got the life care, which increased 47%. Now, life care is still a very small chunk of earnings, of profit for Shinoken. But, that's impressive growth. This could become a very meaningful segment within a handful of years. So what I did was I applied these multiples. Now, I increased the multiple for the real estate management. I think Jeremy was being a little bit too conservative with a 12x multiple there. So I increased it to 15, kept the rest of the multiples the same. So we're using full year 2020 EBIT numbers and these multiples to come up with kind of what is each part worth in billions of Japanese yen. So we sum all those up and we get a total around 74 billion Japanese yen. Now, when Jeremy did this, there was net debt. Okay, the company had 4 billion more in debt than it had in cash. The situation just a year later is that we have net cash. Okay, more cash than debt on the balance sheet, which is great. So we're going to add 3.3 billion to come up with sum of the parts equity value for Shinoken, 77 billion. So to get to the value per share, we have to divide that equity value by the number of shares outstanding. And they have 34,420,000 shares outstanding. So we get a value per share of 2,243 Japanese yen. Now the current stock price as of today for Shinoken is 1236 Japanese yen. So we have a potential upside of 81% just based on the value today, doing a sum of the parts valuation. And this doesn't account for the real estate investment trust that Shinoken just launched last year and could grow to be a very significant piece of this business. But I didn't include that because it's still very early on. But it's an exciting business that Shinoken is involved with at the moment. So that's kind of an estimate today what this business might be worth. Of course, Pabrai sees this thing as a long-term compounder. The equity growth for this company has been very impressive. Return on invested capital has been very impressive. So, this isn't one of these cheap kind of cigar butts or value traps in Japan. This is, I think this thing has spawner DNA that could do a really great job of compounding capital over decades. So, that's what we're looking at. And then I wanted to pull up one more piece here. This is Retro Ranger, like I mentioned, got in touch with Mike Kruger. And I wanted to mention this last piece. So there was some concern about shares being donated to a foundation, okay, for Shinoken, and that current shareholders were going to be diluted because of this, because shares were being donated to this foundation. It seems that Mike Kruger doesn't have any issues with shares being donated to the foundation. I guess in Japan, foundations are always sponsored in this way. It's a cultural thing. Japanese companies tend to minimize this with stock buybacks, okay? So, I think this is a big reason, if I recall correctly, that Jeremy Raper got out of Shinoken. So he was very bullish for a couple of years there, and I believe he's fully out of his position. And I think I saw on Twitter, the reason was, he kind of lost trust in management with this kind of donating shares to this nonprofit, this foundation. So, I'd really like to hear more from him about that. But it doesn't seem to have discouraged Mohnish Pabrai either, based on what he's been doing recently. According to TIKR Terminal, it looks like he's continuing to add to that position. And in recent talks, he's also mentioned, he's not going to name the company because he is still building a position there. So for what that's worth. Anything else I want to share? This talks about the REIT here in the Value Investors Club write-up. Anything else? The big kind of value thesis for this company right now, it's basically trading at a price to earnings under 5 times. And if we go into, I actually wanted to do this, go into not Value Investors Club, TIKR Terminal, we can see what the acquirer's multiple is for this thing, which is something I like to pay attention to. Enterprise value over kind of the last 12 months of EBIT, earnings before interest and taxes. So let's get kind of that most recent info here. So we're going to go down to valuation. What are we going to look for? We're going to go into, multiples. Here we are. So this is the latest number, 4.5, okay? Acquirer's multiple. That is a very low acquirer's multiple, very attractive there. I'll also say that, and where is this one? The payout ratio is pretty high. So the dividend, I believe, is around 3% based on the current price, comparing the current price to dividends that were paid out over the last year. 3%, and that dividend payout ratio continues to increase over time. So that's another way to identify that this isn't just some Japanese value trap where they're hoarding cash. They're paying out dividends. So that's good to see. That tells me that management does care about the shareholders, which is also indicative that the CEO owns 20% of the outstanding shares. So anyway, guys, that's what I've dug up so far about Shinoken. Let me just run through my notes real quick to see if I want to mention anything else. Yeah, it's kind of interesting. It was founded in Fukuoka, which I guess is Japan's Silicon Valley. Has expanded to a handful of other cities. They really like to build within a 10-minute walk to the nearest train station. So they're targeting a very specific demographic. And it's a demographic that's actually growing in Japan. The overall population of Japan is declining. but the particular individuals that are being targeted to buy these properties, that population is expanding. So that's encouraging. Right. So when they embark on a new project to build one of these apartment buildings, they get a 20% down payment before Shinoken begins construction from, the individual who's going to end up buying the property. So that really helps prevent customers from backing out after Shinoken already has money invested in projects. So that's nice. Anything else? I think that's pretty much it, guys. Yeah, let me know if you have any other specific questions about this company, if there's anything else that you've seen doing your research on it that makes you excited about the long-term prospects, or that gives you cause for concern, right? I definitely want both sides of the argument here, both the bullish case and the bearish case for Shinoken. So hit me up in the comments if you have anything to add to the investment thesis here. And with that, I will leave you all till the next video. Take care.